The yen surge following a rare U.S.-Japan joint yen buying intervention is already losing steam. Tokyo and Washington vowed to take further action if needed, but analysts see little room for gains beyond the $1.55 per dollar level. The coordinated action was the first since 2011 following a devastating earthquake in Japan. Analysis of BOJ data indicates that Japan may have spent as much as $34 billion buying yen last Friday. The U.S. Treasury also reportedly sold euros for yen to support the battered currency. The coordinated action has also pushed Japan's short-dated yields up as markets price in a higher probability of an earlier BOJ rate hike. Today, though, yields falling as lower oil prices ease inflation concerns and as investors await the results of a 10-year debt auction later in the day. The coordinated intervention by the U.S. and Japan was their first joint market action since the aftermath of the 2011 earthquake. For CNA Explains, Elizabeth Newell looks at why the U.S. got involved this time round.
The interesting part about this yen intervention is how the U.S. joined in. It didn't do so just to help Japan. It was helping itself too. This is how it works. To support the yen, Tokyo buys its own currency and sells U.S. dollars. That means it needs a lot of dollars. And where will it get that? Well, Japan is the largest foreign holder of U.S. government bonds, with more than $1 trillion of it as part of its foreign exchange reserves. So it could sell those U.S. treasuries. But that's something Washington wants to avoid, because if Japan sells a lot of U.S. treasuries, bond prices could fall and yields would rise. Higher yields make it more expensive for the U.S. government to borrow money, and U.S. borrowing costs are already elevated. So U.S. involvement helped reduce the risk of Japan having to rely more heavily on its own dollar reserves, also helping shield U.S. financial markets from additional pressure. Plus, there is the issue of trade. President Trump has repeatedly criticized Japan's weak currency. He said it gave Japanese manufacturers an unfair advantage. Supporting the yen helps reduce that imbalance. President Trump also called the move a signal of friendship.
Because we have a good relationship with Japan. We're very strong, very, very strong financially. And they are, they have a weakening yen, and they wanted a little bit of help.
But analysts say intervention alone is not enough to help support the yen in the long term. For that to happen, they say the Bank of Japan needs to narrow its interest rate gap with the U.S., a move out of the hands of American and Japanese finance officials. For CNA Explains, I'm Elizabeth Newell.